Hey everybody, this is Jim at SP500chart.com. It is, I believe, the first day of spring, and which comes one day, well, not really one day earlier because this was a leap year. The first day of spring, I believe, is today, March 20th. And we're going to use some time-honored techniques to understand modern markets. But before we do so, just need to remind you, as always, that the website and this video are for educational purposes only, and nothing stated at SP500chart.com or in this video is intended to be used as investment advice. Look, guys, if you want to know the truth, technical analysis is nothing more than an educated guess, and that education is in what has happened time and time again when certain patterns and conditions exist in the stock charts. And so look, I can draw lines on these charts, but you have to draw your own conclusions from your own research. If you're a long-term investor, you might not be that concerned about what I do. But if you're a short-term investor, you might want to pay attention. But you still have to make your investment decisions based upon your own research and your own financial situation. I'm not a licensed financial pro. I'm just a guy who draws lines on charts. Okay, we are looking at the S&P 500, and we are looking at a 30-minute chart. And what I need to show you today is, you knew it before you started looking at this video, but the day started out weekly with a roughly, what from the high of yesterday, roughly 10 to 12 points lower than that at the lows early this morning. And then the market started to kind of rally back up. But you know, this is looking a lot like a bear flag to me. We'll take a look at it in just a second. But I want to show you that our first little shot across the bow here, this red trend line broke today. Okay, and it bounced on roughly this blue line that has been, which I'm not that sold on the reliability of this particular feature in the chart, and the reason is because it doesn't have very many touches at all. Just the one in October, starting on that October 3rd low, again in late November, and then, excuse me, I'm looking at the green line. The blue line starts late November, late December, and then it just kind of runs up and doesn't get tagged for a long time. So that kind of leads me to wonder just how important that is. But that's about, when we zoom in now to that 15-minute chart, that's sort of where she bounced. So, isn't it funny there? I drew this little circle saying we got this cluster of support in here we need to watch out for. That's like the second time in the past month or so where it's like the markets go and the S&P goes up and just kind of stays in my little circle. It's almost humorous. It happened back here in around the 9th. And now it looks like we came down to the bottom of the circle, came up to the top of the circle, and that's about where we closed. Now, I mentioned that when this red line breaks here, that is something of a shot across the bow. There is still some support underneath us if you're a believer in this blue line. Or, you know, one might say that this little rally today is something of a back test to either this bottom line or this top line. But guys, these two wedge lines are so darn close right now. It's hard to tell. It's hard to tell which one is which. Literally, in 1, 2, and 3 days, these lines will touch, and so the room between them is getting less and less with every passing hour. Let's look at a 5-minute chart. And let me get this chart working properly. Hold on just a second here. There, finally got that to work. So I mentioned that this looks kind of like a bear flag, and let's see if it kind of shapes up like one. To begin with, do we have a series of tops that pretty much line up? Well, yeah, we got 1, 2, 3, 4. Then do we have a series of bottoms that line up? Well, if we work off this low bottom and follow this guy on up here, you'll see that not only do we have something that looks like a bear flag, it in fact looks like a bear pennant, which is essentially a rising wedge pattern after a downward move, which we had today. It looks like this is coming back, and I suspect, this is just a guess now, but this pattern should produce more downside. And my guess would be that it is possible that there is a short-lived rally tomorrow, maybe to backtest that little breakdown late in the day of this small pattern. And if that would be the case, then I would expect that back test to then touch off some selling. So right now it looks like that move underneath our red line not only broke that, but it appears to be setting up an ascending a wedge pattern or a bear pennant, a type of bear flag that that should produce some more weakness in the day or days ahead. Now, I don't think there's going to be a lot of room for this market to fall very far, because we've got some fairly important features underneath us. But hey, let's just kind of keep our eyes open, and depending upon whether you're a short-term or a long-term trader, you know, just take this pattern under advisement. But even if we break down and break under 1400 again and stay under 1400 for a while, I don't think it's going to be a real long while. And I'm saying that based upon a pretty simple thing. Again, I'll remind you again, I say that based upon a long-term trend line that we are well over. And I know this line only has 2 touches, but those 2 touches are major market levels. And I could see the S&P in the months or even years ahead coming up into this area, 1600 now, that we're above this line. So, you know, just be careful. I would say if you're a bear, I'd be looking for probably a spot to cover. And don't forget, I mean, if you cover at support, okay, let's say the market runs down and we hit this blue line, okay, and you say, well, gosh, you know, I'm short since back here in December. Maybe it's going to break that line. Well, look, here's the deal. If you cover here and that line does break, it will probably get a back test. So you got another chance you always have another opportunity in the markets. So that's been a lesson that's taken me a long time to learn, but there's always another opportunity. You don't have to play everything that looks good at the moment that it looks good. So be patient. Look, that is the video for today. I don't think I've really got anything more to add other than the fact that, as I mentioned, this red line did break today. That is the warning shot across the bow. We now have a bear rising wedge that should produce more downside, and frankly, it should lead to taking out 1400, and we might start to get down well, I think we probably will get down into this area here where there's not a lot of support, and then we might look for some support down in the 1370s, 1380, and if that fails, then we start looking for support lower than that. So look, that is the video for today. And I want to remind you that if we do start to sell off, I'll remind you that the markets almost always give us some clue as to where the turn is. And in retrospect now, let me change that. In a week from now, we may very well look at this breakdown of this red line here and say, well, by golly, that was exactly the spot where the markets turned, and now they're heading back down. So when they head back down, we start looking for a corresponding turn of when they're going to head back up. So that's really my goal right now, is to play that pullback from that big rally. I think we're going to pull back. And wherever we start to head back up again, I suspect we will head up and we will top that 14, 15, 14, wherever it was. What was the high? 14, maybe a hair under 14. So look, sorry about that. My phone rang. It was my wife. I had to take the call. So anyway, like I said, there should be a corresponding move at some point that would be a good spot to go long, because I think it's pretty clear this market wants to go higher, and if we do, we'll get over that 14 level wherever it bounces, somewhere in here. So look, thanks for watching the video, and thanks for being a subscriber. If you are, if you're not, just think about it. It's pretty darn cheap, really. What else can you get for $19 and was it $19.95 a month? That's not a whole bunch of money, but I understand if you just want to follow these on a delayed basis from now on, that's fine too. But if you think this information might be something that you could digest into your day-to-day trading activity, again, realizing that it's just one other approach and it's never an absolute certainty, to be sure. But if you think it might be helpful, to consider subscribing, because then you'll get a 1 or 2 day jump on everybody else who has to wait until these videos become, well, maybe just a little bit stale. So get them fresh, hot off the press. And thanks again for watching.